That kind of visibility is what moves a company from hope stock, hopium stock to execution story. The backlog strength signals multi-year contract stability across DoD, logistics, and analytic platforms. Now, number 3, generative AI expansion, the Ask Sage acquisition. So Big Bear's announced acquisition of Ask Sage, a secure generative AI assistant for regulated industries, is the kind of next leg catalyst that could fundamentally expand its TAM, its total addressable market. This move plugs Big Bear directly into government-safe Gen AI, an underserved niche where commercial players like OpenAI and Anthropic just simply can't easily go. It's an intelligent play for sticky, high-margin software contracts. Number 4, solid execution despite macro headwinds. So even amid federal budget.
Okay, let's jump into a breakdown here. This is for On Holdings. Just to confirm, this is a New York Stock Exchange company. German abbreviation. Checks out. Okay. So there's the numbers. Obviously, it would be great to get everything in US dollars. Sports products. Net sales growth guidance, 30% year over year. Hard to see exactly what's going on with this company, but yes, I'd like to see what these guys are doing. 24% increase year over year. There we go. See if we can get some similar tickers out of this. So, On Holding. Raised full year guidance, $1 billion in net sales, 25% increase year over year. Swift Athletic Footwear Company, $1 billion in net sales. Okay. Get in early. This stock is about to take off. Number 26. Get in early. This stock is about to take off, in my opinion. this isn't financial advice, but my research suggests it's a good idea to buy as much as possible before November 26th. This is a Swiss athletic and leisure wear, a sportswear company. They distribute that sportswear all over the world. Company is ticker symbol ONON, On Holding, and they do release their earnings in Swiss francs. Given that they are listed on the New York Stock Exchange, we want that in US dollars. They have $1 billion in sales, 25% growth in that net sales year over year. And in a stock market where everything moved down the last couple of days, this stock just reported earnings and is holding incredibly well. It seems completely disconnected from the market, which is very good to see money flowing into this where everything's been sucked out of the room in the past week, including Bitcoin going down, gold having a drop as well. So it's not like money rotated into different assets. I mean, a little bit into healthcare and oil, but this company looks strong. Let's jump into a little breakdown on ONON.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is a little bit about other companies that are similar, basically German companies trading in US markets. So this is a German company. They are located in Zurich, Switzerland. So for that reason, everything is reported in Swiss francs. So it's a little bit under the radar for that reason, I think. I'm not sure as many people are talking about it. This earnings reaction is strong, and it doesn't look crazy strong. You look at some other earnings reactions like GM, that looks really good, or, well, not this quarter, but if you look at Reddit this second quarter, just very strong. But what's interesting is if we look at the SPY the last few days, well, yesterday went down a lot. And despite that, ONON is holding very well. So you can risk this high volume level around 42, 41 and 3/4. And you've got a pretty good opportunity there. There are some other tickers to sort of use as benchmarks just for sanity checks. Really, these are other German tickers. We don't really want to look at the OTC tickers, so it's kind of in a league of its own, I suppose, when it's really just SAP, and SAP is so big it's not even really a good analog. Okay, so this doesn't even really compute matter. So for that reason, it's a little bit speculative, you might say, but generally you want to buy stocks and themes where everything's going up. But at this time, if we look at Nike, we look at DEC, we look at Crocs, Nike is doing okay. It's been down a lot. If we look at Crocs, it's not doing well at all. So I don't know how healthy this sort of theme is. DEC, Birkenstock as well. Just not really looking super strong at all, right? Little bit of a curl up in some of these, but only recently. And yeah, on holding, showing that strength. It's not necessarily related to the other ones, but if you're going to buy one of them, Nike didn't have earnings, right? Earnings were back here. Birkenstocks didn't have earnings. Crocs, well, it did have earnings, but went down. So by process of elimination, this is kind of the one that held up on earnings. The earnings were solid. You can see that big earnings per share beat in US dollars, and it's holding up. So it is hard to find stocks to buy right now. XLV is the healthcare ETF here, holding up, but probably difficult to buy at this level. Biotech's doing well as well. XBI and LABU holding up, but biotechs have that risk of, some FDA challenges like QURA or trial results where a patient has a side effect like this CRISPR stock. So it has to be on holdings. It's unusual to be talking about a German stock, listed on the New York Stock Exchange, but still, that's headquartered in Switzerland. But it just so happens that this is the pattern that's holding up right now. So if you're interested in the earnings themselves, they did increase their revenue growth forecast. So guidance is strong. That's what you always look for: strong earnings, revenue, guidance. So earnings and sales as well as guidance. And they did have a little increase in margins as well, which never hurt. So if sales in North America, South America grew by 20%, that's a nice little boost. So we'll see what happens. This is a famous influencer, Zendaya, like a very famous one. So they're kind of similar to that Abercrombie and Fitch or American Eagle. Well, they got acquired. That's not a good example, but Abercrombie and Fitch definitely utilized some sort of pop culture pump, dare I say the pump word. I only call it that because it ultimately didn't work. Of course, if a stock keeps going up and they raise money off of a campaign, then no one would be saying the PUMP word at all. But unfortunately, Abercrombie and Fitch did sell off here. So not saying that sort of same, prophecy is going to happen here, but just saying, be aware. That's a risk factor. So the level's super strong. The chart looks great. Everything's great until you realize you're buying a German company headquartered in Switzerland. But you know what? Kathy Wood bought Alibaba somewhere in here. Okay, that's a Chinese company, which is probably the riskiest you can get, more risky than a German company. And Baidu has been super strong as well. I mean, not as of the last couple of days, but huge run this year. So I think there is a lot of opportunity in these stocks with real earnings and sales. Not talking about Chinese, stocks that just dilute like this, that go down, down, down. I'm talking about stocks that have big turnaround stories. So that's the level. That's the idea. If you like these ideas, hit that like. If you want a free course, hit that subscribe. And if you want one-on-one help, head over to stockscommunity.com. 7-day trial for $25.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay. Where are we at here?
Budget volatility and delays in contract timing. Big Bear reaffirmed its full year revenue guidance of $125 to $140 million. That's confidence. It shows management believes the backlog will convert and the new AI products are going to continue gaining traction. Maintaining guidance while moving into profitability tells the street, look, we're controlling what we can control and it's working. Now, the market reaction, I think, confirms this. You're seeing a lot of people start reallocating into the stock after the earnings. And then number 6, strategic positioning. I think this is very, very beautiful positioning here. Big Bear's bread and butter AI-driven decision intelligence for defense, logistics, and infrastructure is exactly where the biggest AI contracts are going next. With Fusion, Argus, and soon Ask Sage, BigBear.ai is targeting the AI operations layer where predictive...
Okay, let's talk about Guardian Health. Right here. Super strong reaction, earnings per share, smaller loss than expected. So that's good. They do have some direct competitors in cancer diagnostics. And revenues at 200 plus million, 40% year over year increase. Okay. Guardian Health. This one stock will skyrocket in a few days. The company had 200 million plus revenue just reported for Q3, up 40% year over year. And they've had increased usage of their cancer screening test. So their oncology segment is growing, which is a massive market, sadly. So that's the company, Guardian Health, ticker symbol GH. That's the earnings result. And let's jump into why this company could be a good buy right now. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is a little bit about what their test is all about, looking for tumors. And it's pretty good, 95% here. And they're expanding that test as well for different kinds of cancer. So pretty big deal stuff. Not a fun topic to talk about, but definitely really good results. And if we look at the earnings results, revenues are up about 40%. So still reporting a net loss. If we look here at how this company is doing, it's almost a $10 billion company. This is a big vote of confidence. Almost 100% institutional ownership is a big deal for a healthcare diagnostics company. Basically, you get to let really smart biotech investors pick the companies for you, invest in them, and then we get to just see how the earnings come out and how that institutional ownership number stays high. And if it does stay high, it's a good thing. So they do rely heavily on reimbursement, insurance, but that seems like a pretty stable aspect of their business so far. If anything major comes into the news cycle, that could be a good idea to check on your Guardian Health if you do buy the stock. But here's the deal. This is the number, 265 million. Oncology revenue up about 30%. So that's, I think, the big deal change. They also raised guidance, which is always positive for a company that has solid earnings to also raise guidance. And we saw the stock go up significantly. It's kind of gone sideways for a week or so. But if we look at the market, I mean, the market it's climbed a little bit, but yesterday was a really tough day. So it gave back everything pretty much yesterday that it had the past week made up. Guardian Health, not such a bad drop, okay? Still holding above this level of about 92.80. And if we look over here, that's definitely the level. It's the high volume. There's all the volume. Close. It's the level. All these buyers were distributed through these days. This is a high volume day here. This is the morning, which we can see here just to reiterate. Well, this is the actually after hours, and then this is the morning climb. So all the volume happened here, which means we want to buy over this level. Important, 93, not over 89. $4 a share difference is a big deal to be able to risk off that 93 level. So that's a little bit about the opportunity there technically. This company, you got to always be a little bit careful buying companies in this biotech, this healthcare medical device sort of bucket. If we look at some other cancer screening similar companies, they're doing well. I'm just saying in general, you have to be careful because you never know if there's going to be some type of crazy FDA result like QURE, or FDA decision, or test result like NTLA with the sick patient. So a big move that's very similar is ILMN, Illumina. big earnings reaction, holding up pretty well. Not quite as well as Guardian Health, but not a big drop yesterday and strong today. So this one is very similar and a good one to keep an eye on. If they both have strength, that's good for the sector. It's good for Guardian Health. So about a $20 billion company. They also do, sequencing in cancer diagnostics. EXAS, a little smaller, and then a very small company, VCYT. So I'm not sure these results, reactions, stock prices are, quite as interesting, but holding pretty well. So if this can get up above this level, it could definitely be a buy level. A lot of buying here. Of course, pretty significant selling the first day as well. So reaction is solid as far as earnings reactions go. And then this VCYT, Verisight. I'm not intimately familiar with all these companies, but similar to EXAS. So solid reaction, just not quite as top tier as this ILMN and Guardian Health. And just to put this in perspective a little, I mean, I'm being more critical than I should. It's pretty incredible to have 4 solid earnings results in one sector. I mean, that's actually pretty rare, even though some of these sold off a little bit. So there's definitely strength in the cancer diagnostics, the genetic screening theme. So that's how it works. So, companies will buy, funds will buy all 4 of these companies at once. And if we try to look at sort of similar themes, there are some themes that are doing well. I mean, oil is doing well, but if you look at the initial reaction, it went down. I mean, sure, PARR had a solid reaction afterwards, but initially kind of went down. So it's pretty rare. I mean, these are some of the best themes in the market, oil and gas as well as genetic screening, but these oil and gas reactions were just not as clean. So I do think this is pretty much in the top tier of opportunities right now. Guardian Health, I, of course, don't know if it can hold this level, but I do know that's the best level to risk. So definitely a great opportunity despite there being some risk in biotech. This is in testing tools, so it's probably a much higher chance that it's going to stay up there and not have a huge drop like some type of trial company like QURE is for the Huntington's disease cure. So that's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. That gets posted in the YouTube post section. And if you want help, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay.
Analytics, automation, and real-time situational awareness converge. In my opinion, BBAI is trading like a very distressed asset while posting profitability. I think that this backlog growth, the new platform expansion, and some of their other bold moves that I think is going to really cause the revenue to increase over the coming years. Well, I think the current prices are basically distress level prices. And if we're being honest, the stock should already be trading somewhere around $20 to $25. But when you're looking out even further, I think you're looking at a lot more upside. Now, the context here is the first time we spoke publicly about the stock and our belief in it on the channel was back on March 3rd, 2024. And at that point in time, the stock had just cooled down from $418 a share to $365. And I said, look, this is going to be aging to be a great buy if you look at it over the long term. And if you had bought it then, it actually ended up going as high as $10.36 this past February before it cooled down again. And it dumped again during the tariff crash. And then after that, you saw a nice recovery back to $9.37, and then you saw another sell-off and we're all the way back down to $6.29. So what do you make of this trading? Well, look, you have to understand that small caps, especially of this variety, well, they're in what's called a price discovery phase. The smaller the stock, the more likely the stock's going to go into euphoria or dysphoria cycles just based on a press release or two.
Okay, let's talk about Rivian. 1.5 billion, 80% year over year growth is massive. Software and services revenue is up a lot. So to figure out what that is. $40,000 vehicles in 2025. $40,000 versus $20,000 for Lucid. $250 recent million versus recent settlement. And 1.5 billion revenue. This stock will shock everyone. This is not financial advice, but my research suggests it's a good idea to buy $50 of this before November 24th. The company is an electric vehicle company. They're forecasting 40,000 vehicles delivered in 2025. This is double their next lower competitor, Lucid. They also had $1.5 billion in revenue, up 80% year over year, with a very significant 400 or so million in software and services revenue segment. So I'm not going to hold you hostage here. The ticker is Rivian, ticker symbol RIVN. So Tesla's obviously the leader, but this company is having a major turnaround. Recently settled a $250 million case that they had defrauded their investors. And the CEO, in a similar vein to Elon, has a performance-based pay package that, if milestones were met, would make it the largest pay package in history. Of course, it's pretty hard to imagine this company doing better than Tesla. I'm just saying 40,000 deliveries is a lot, and this earnings is pretty solid result. So let's jump in a little breakdown on Rivian.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so this is this revenue, 1.5 billion, 80% year over year growth. Auto revenue is up 50% year over year. Software and services revenue up 300% to 400 million. And they're profitable. So pretty impressive. It's not a huge company. Founded in 2009. They've got, I mean, that's getting into a decade and a half at this point. It seems like a super new company, but this is a big deal. I mean, 50,000 vehicles delivered in 2024, expecting similar, maybe a little less vehicles. I guess they're shutting down a plant. And if we compare them to Lucid, Lucid's forecasting just 20,000 vehicles. So it's hard to compare to these other companies, but before we do that, let's do a little reality check and look at what we're actually looking at here. So this thing is a whipsawing beast. It's not something you just want to throw some money in on the guess that it's going to be as good as Tesla. What you can do, in my opinion, is zoom in a little, see a level kind of here. That's pretty important. 15 and change, almost 16. But even lower risk, you just look at this earnings reaction and you say, hey, this reaction was good, right? And it kept going up. And this level was obviously very important. It held here. Definitely undercuts a couple times, but now it looks like it could be holding again. So why this level matters or what it means, it's not voodoo or anything. It's just a bunch of people or one fund, a few funds, a bunch of shares were bought. Someone was accumulating this day. And if the price can stay above that level, they're making money. And maybe they accumulated the following days as well. But if we look at the volume at price, which we can see here what all the volume is, but there was definitely significant volume all in here. This is not just over here, but from right here on this day compared to up here, there's way less volume, obviously. So if all these people are in the money, they're making money, then the price is going to stay up. That's sort of the idea. And if we look at the SPY had a gnarly day yesterday, really gnarly. It gave back an entire week. It almost looks similar to the 10-10 day, not nearly as bad, but kind of close. That was the crypto liquidation day. So Rivian going down with that, but interestingly, notably, it set it up right on this level, which is why I'm talking about it right now, because these stocks could bounce. Now we'll see if Tesla bounces. Super strong, relatively strong bounce from all the way down 380s up to 405. So it seems like that's a good indicator of the risk being back on after these couple of days off. So this looks like the level. That's the company, Rivian. Now, just to get a little more context here of what we're talking about, this is the software. They're trying to go fully autonomous long term. They're probably not going to be the leader because Tesla is such a juggernaut in this space. But apparently, this 400 million is a 300% increase over year Q3 of software and services revenue. So vehicle electrical architecture and software development services that didn't happen last year. So I guess this is money that I don't know who's paying this. It doesn't really make a lot of sense. I guess it's Volkswagen that's paying them that. And I know Volkswagen does have agreements with battery companies as well. So battery companies get paid a royalty for doing the research. Then Volkswagen gets a license to use their technology. So that might be what's going on here. So they do over-the-air updates, which is definitely a little scary. But that's the future. For better or for worse, your car is going to update over the air. And it's going to be, at some point, self-driving. So this software is definitely really important. And it has to be Volkswagen paying them that money. So we can jump into that in detail if we have to. But the main point is that they have proprietary software. They're getting money for it. And if auto company doesn't have software in this day and age, it's kind of a red flag, which is crazy to say, but that's what it seems like. So we'll see. But what we have to do really is compare, like, do you want to buy Lucid right now? I certainly don't. That chart looks horrible. And the earnings reaction was even worse. If we look at some of the Chinese competitors, sure, XPEV has been doing great. A similar sort of sell-off, maybe off of this level, is interesting to buy, but it has to get over earnings first to really be a buying opportunity. And LI, just a downtrender, still has to get over earnings. So there's not really a lot in terms of like follow-up companies to Tesla that are interesting. I mean, this is a big deal that this LI ticker is profitable. NIO also is a perennial favorite. It's got a rabid fan base. Everyone's excited about their battery swapping. And this is a lot of vehicles, 200,000, but they are unprofitable. And sure, the stock can go on crazy moves, but it's still in that speculation bucket and it's been heading down. So I think this is the best company for sure. It's Rivian. This is the chart. If you like this idea, hit that like. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want one-on-one help, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Got a little wordy there, guys. Sorry about that.
Or based on an earnings release or two. And that's actually a pretty big opportunity because when people are completely abandoning conviction in a stock,
So what
that's
about
how you get a better
Tesla?
deal. And when you get the euphoria, that's when you can start trimming profits. But long term, we do see a very beautiful picture for this stock. Okay, let's talk long-term price target now. Of course, quick plug, if you are a Discord member, you're going to get all of our price targets and you're going to get them all first. But this is what we sent out to Discord members today. Our BBAI forecast through 2030 is as follows. In the commercial AI platform, I see about $680 million
of revenue, up 10% year over year. Elon's pay package got approved after that 56 billion rejection in 2024. Let's see. This stock will surprise everyone. This is not financial advice, but my research suggests it's a good idea to buy $50 of this before November 28th. If you've heard of fractional shares, that makes a ton more sense. The company is Tesla, ticker symbol TSLA, and they recently had earnings which were solid, 10% year over year growth in the 20 billions. More importantly, Elon's $1 trillion pay package got approved. In 2024, his $56 billion pay package was rejected. Now, that's the subject of a little bit of disagreement. It was a Delaware judge. And recently, Coinbase has been the pioneer in moving to Texas from Delaware. So the whole Delaware legal monopoly might be slightly shifting. We'll see what happens. But the important part for Tesla is there was some sell the news on that pay package being approved. Tesla's down significantly with the market being down. But vehicle deliveries have been solid, even though that was sell the news too. And then these earnings were solid as well, even though there was a little bit of profit taking right after them. So it's been a whipsaw. We'll jump into the chart as well as what Tesla has been up to recently. Not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here we have it. This is what Tesla's been up to. Tesla and Grok. Grok is the equivalent to ChatGPT or Gemini or Meta AI or Claude or DeepSeek. It's the LLM, the smart AI voice assistant, and it's integrated into Tesla. It's in beta, kind of like how if you go on X, it's in beta as well. But it's very similar to ChatGPT. I think they were able to get the data centers up running, the Colossus data center, in like 6 months, which is crazy. Using, interestingly, before we jump into Tesla, some of these Bloom Energy fuel cell mobile deployment units helped get those XAI data centers up and running. And talk about running, this stock has been on an absolute tear. So definitely important to keep an eye on this as it bounces off of this moving average. Big selling here. This is the market as a whole showing some significant selling. It's really only yesterday. But if we look at a couple stocks, it actually was a few days. Nvidia down significantly a few days. And then before that, a big sell sequence, bunch of down days in a row after Trump and Xi met in South Korea, even though that meeting was actually relatively positive. Lowering of tariffs on both sides, US and China, but still selling off, sell the news, whatever you want to call it. So you might say the market was down a little bit yesterday on, they're reopening the government, which means people might be worried that, okay, now we're actually going to get insight into all this government data that we haven't been really knowing anything about. Unemployment numbers, commitment of traders, I guess, what investors are long, what they're short. how short they are, how long they are, all that data, which could sort of shake up how people have been investing in the market. If that data is not great, that could hurt the market. So maybe there was a little bit of precautionary sells before that data came to light. But enough of that. This is the stock that we're talking about right here, Tesla, okay, which kind of is the market leader. I mean, it's not, really Nvidia is the biggest company, but in terms of representing sort of greed and fear, enthusiasm and caution, Tesla represents it well. It's shown here in this big run up after the election and then the selling off, profit taking after that euphoria, unwound a bounce on earnings and really just a bounce on being oversold. Some selling off on Trump and Elon's relationship going sour. An incredible coiled, probably the best flag of the year over the course of multiple months, leading to a big breakout here on massive volume. And then sell the news on delivery numbers up here. Trump Chi down day here, rare earths. Miscommunication. Rebound, earnings sell-off coupled with a move up. The earnings were actually good. The reaction's a little muddy, and then some profit taking there, and then it's been rolling over. So that's the story in a nutshell. That's the chart telling the story, really. But what's great about today is that bounce is really favorable. It looks strong. Now, I'm not saying you want to buy every bounce on a move down, but notably, this is the market moving Tesla down. It's not any particular piece of news. I mean, Meta moved down based on that $15 billion tax recognition. So it's not so surprising that this bounce is not materialized. It's kept going down. So Tesla, a little bit different. Not saying this is the best setup in the market. If you had to quiz me right now, I would say the best setup in the market is probably, well, it's already a bit gone, but WELL, this real estate REIT went up already a little bit. It's tough to find the best segment, best setup in the market. Tesla's up there for sure. It's just, do be careful to get out of this if the market rolls over. But if you want to own some Tesla, you've basically been handed a gift right now with it going down so significantly. So 28 billion in revenue is up 10% year over year. Of course, Tesla not valued simply on that revenue. They're valued on humanoids and full self-driving, record deliveries. There was a sell the news on that delivery news. And then, look, I mean, there's always risk with a company headed by Elon. So we don't really have to speak to that in detail. All these topics have been pretty extensively covered. So that's the idea. Tesla, that's the stock. And if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. That's posted in the YouTube post section once a month. And if you want one-on-one help for $25 for 7 days, head over to stockscomedy.com. You can test drive that over there.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right. Let's see what we got going on here.
Of revenue in my bull case. For the government and defense AI systems, I see about $410 million, and this is going to scale up to create a combined total revenue of $1.09 billion at a multiple that I would think is appropriate based on much higher comps today. I would say you're looking at something around $27.3 billion in market cap, and that comes out to a price per share of $55. Now, a few little details that are important to note in this situation with the implied stock price. What I did is I went and I dramatically increased the share count.
is a real estate ETF. Oh, it's actually a housing ETF. Well, it's both. It's senior housing real estate. 2 billion, 30% growth in revenue, 2.5 billion. Okay. There is one stock that is about to skyrocket. This company is in the senior housing real estate space. So think the real estate that senior housing development is built on. It's a boring market. The margins are relatively good, which is a weird way to say, people who age and go to senior housing facilities pay a lot. The company is Welltower, ticker symbol WELL. 2+ billion of revenue, up 20% plus year over year, and they invested 23 billion in a new real estate. It's a REIT, a real estate investment trust. So this is a way to invest in real estate without having to be more hands-on. It's not financial advice, but the market's pretty ugly, after yesterday, as the time of this video. Massive down day right as the government's reopening. So maybe some worry that the government data that comes out isn't going to be super strong. This company is holding up. It's actually breaking out even as all of this data comes out. It's relatively liquid, $400 or $500 million traded per day. So enough of my talking head. Let's jump into the chart and about what this company does.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here's the story. 23 billion of investment activities. That's a lot. And here's the numbers here. A net operating income 15% year over year, but the big number is this 2 billion in revenue, 30% growth year over year. So that's a big deal. Same store is a little weird, bit of a weird way to measure it, but they're calling these housing senior facilities stores, kind of like different retail locations, but the income grew, and in particular, the senior housing portfolio had a 20% year over year increase. So I guess this REIT covers more than just senior housing, but it seems like that's the majority of it. I guess it also has some healthcare providers, which makes more sense given the same store terminology. And they're in a lot of different countries, US, Canada, and the UK. So out of Ohio, Buffett's out of wherever he's out of Kansas. Someone's going to correct me in the comments, but he just wrote his last letter. High institutional ownership, which isn't as big a deal for a non-biotech, non-healthcare medical device company, but still always great to see that as an investor. And here's some competitors. VTR, very similar, senior housing, and Peak, which is more in maybe a little more medical focus. So we'll take a look at these quickly. VTR, strong earnings reaction. Peak, load, Schwab. We can take a look at this on a one-day chart so it loads a little more smoothly, right? I don't know if this company is still around, if we're being honest. So I guess we just have really VTR to look at. Omega Healthcare and CTRE, OHI and CTRE. Those look relatively strong, not the best reaction here. But in terms of timing, like all these REITs are relatively strong, right? These housing REITs over the past year. And this one's no exception. Pretty massive run, even as tariffs went down, like almost no correlation besides this nasty move down with the worst of it to the market. So it's gone on a huge tear, but notably after a bunch of green days in a row going sideways, forming a level around 190 and change. So pretty clear opportunity to buy it over that level. Super interesting spot. You never know if you're late to the party once a stock already breaks out like this. And I wish we could look at it. Yeah, we can look at it on a 24-hour chart just to see a little more clearly how this is already broken out. Definitely today was the day, right? But if we look at some of the pre-market and after hours prints, you can see it's sort of been foretelling that. And it's really not really broken out over this 195 high that's up here. So that's why I'm still mentioning it, even though, of course, in a perfect world, you get in on one of these tight days and then you just hold for a few days and then you get the benefit of, being in the money and already being up a couple few percent or whatever it is, 1% on this big up day. It's not a fast stock. It was 2% a day. So it's not super fancy, flashy, but man, has this thing gone up and strong hold after this earnings sell-off. Very clearly a flag. I don't know what else to say. Try to find another flag in the market right now. I dare you. So talked about those similar stocks. There's other REITs as well that may or may not be helpful. AHR and GMRE. I don't know how clearly these represent the theme, but their earnings reactions look okay. Up a little. So that's good. And as far as this company in general, one thing we have to worry about, I guess, is senior housing demand if we're investing in this company. Rental leases, the real estate market as a whole. So I'm not a real estate guy, I'll be real with you. But I don't think there's anything totally large looming on the horizon. I mean, obviously, commercial real estate has been headed off a cliff for a while now, unless you're in a very popular, like, luxury market for that. So, foot traffic is low. But senior housing, that's kind of traffic is not going to slow down anytime soon, as far as I understand it. Maybe in 20 years, they'll have a change when there's fewer people aging, but this is definitely not a 20-year opportunity. Just a strong Q3, super strong move this year, big reinvestment, $23 billion, and I don't think we really have to worry about too much given the chart. The chart kind of tells the story. So, you know what? In fact, I initially thought this was an oil and gas stock because of oil and gas is also doing well, but senior housing and big flag. So that's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks, hit that subscribe. And if you want a Discord trial, head over to stockscommunity.com. You can try that for $25. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.